morning. It's Vijay here. Today is Friday, the 27th December 2024. Welcome to yet another episode of Pre-Market Commentary. Yeah, hope the sound is clear now. Uh, so yesterday was a very interesting day. The market went up in the morning, opened with a big gap, and then the selling started almost immediately. And for a long time, both the markets, both the indices, Nifty and Bank Nifty, were hovering on the flat line. Finally, at the end of the day, the market closed, the Nifty closed at 23,750. The Bank Nifty closed weaker. Now, the funda is that the straddle players and the strangle sellers, they are controlling the intraday movement. So unless there is some news or there is some information which or a big buyer comes in, then only the markets will move out of this range. Technical analysts have been frustrated, and typically what we see, what I call a buyer strike is on. A buyer strike is when you see the buyers decide that we will get lower prices, and so it's a self-fulfilling prophecy where the prices don't go up and they start drifting down slowly. That seems to be happening from the beginning of this month, because till September end people were bullish, then October and November people took a big beating. So in December people have become bearish, finding different excuses for not buying. I've always believed, and I've always been mentioning, that for markets to go up, you need heavy buying. For markets to come down, you don't need heavy selling. All you need is a buyer strike. And that's precisely what's happening. But from inveterate bull like me, I look at what exactly is happening, and the prices tell me that while the whole world is saying don't buy now, they are not drifting as low as what people want it to be. Most people expect prices to come down to 21,000, and some of them expect much below 21,000. They've been saying this since the beginning of this year, and that has not fructified. So there are some short-term celebrations when the prices come down, not knowing that or not realizing that they hold, if they are investors, I'm talking of, they hold huge chunks of stocks, and if they wish for prices to come down lower, and if they come down, then the whole NAV comes down. Of course, you forget the trolls and the so-called traders who trade one lot, and they celebrate for every 10 point down or 10 point up. Yesterday, it was interesting to see a large mutual fund, which is what they call the value fund. Now they have continuously been in cash for last few months, and they on CNBC, the fund manager mentioned they will continue to be in cash, which means that people who are putting money into the mutual fund are not going to get any returns based on equity. They may get it based on if they put that money in FDs or something else, which are fixed income instruments, where they will get some return. Now, equity fund manager should be putting money in equity, or he should close the fund, not say that the markets are overvalued, and they are now 23%, I think so, in cash, and every time they get money, so that goes into cash, which means they will end up with 25 to 30% sooner or later, because at these prices they do not find it attractive. So a good fund manager, why do we buy mutual funds, or why do we put money in PMS, is because we believe that the fund managers know better. Now, if the prices don't come down, and they're not been coming down for the last 1 month, and if you still insist that I'm going to put money into cash and cash-related instruments, then when are you going to buy? If you have a wish that it will come down to 21,000 or maybe lower than that, maybe more than 10%, then why don't you sell? Because after all, you hold 80%. So I recently saw a PMS fund manager who took great pride on CNBC when he said we are 100% in cash. I do not understand why one should be 100% in cash. It's almost like there are no bargains available, or not even bargains. There are no good investment opportunities available in the system. If you look at the traditional parameters of PE ratio or P by B, as I keep mentioning, Bank Nifty is trading at a decadal low P by E and P by B, and many stocks in the Nifty, including Reliance, for instance, are down close to 30%. Now, if you do not believe that blue chips, when they drop by 30%, and they're not making losses, they're making profits, And if you don't want to buy them at 30% lower and expect that it come down to 50%, 50% and that kind of numbers will come only when there is a global financial crisis, which we don't see, which we saw in 2008. Typically, the large blue chips will fall not more than 30-35%. So quite a few of them are there around 30-35% from their highs. I just don't understand what it is. But anyway, the word on the street is don't buy now. So this is how I think the markets bottom out when there is pessimism. There's nothing to be really that pessimistic about now. One should have been pessimistic, say, somewhere in September and October, but that's gone. So what has happened this series? So this is the third consecutive series where the Nifty has come down, led by mainly by Hero Motors and Asian Paints. Mid cap is down by about 1.5% in this series. Small caps alone have gone up by 1%. So that has been very interesting as far as this series is concerned. The large caps and mid caps are down, small caps are up, micro caps are up. Realty was the star. It went up by about 5% in this series. Pharma went up by about 4.5%, mainly Mankind and Dr. Reddy Lab. Dr. Reddy Lab I've been mentioning for quite some time. We hold Dr. Reddy Lab, that's the disclosure, where it's such a good company. It continue to make good profits and they're into newer areas, but somehow people don't like them. Their P ratio is only about 20. I wonder what people are looking for in Dr. Reddy Labs prices, what prices they want. A Nifty IT hit, of course, a record high, mainly because people believe that even if rupee weakens, or if rupee weakens further, then it is good for IT. But actually, it is not true. But nevertheless, there is a perception that it is good for IT. And the big one, Nifty Bank had doubled 1.5%. AU Small Finance and Federal Bank were the losers. Auto was down. Nifty Metal was down. PSU Bank fell over 3%. Bank of India and Bank of Maharashtra were the big losers. FMCG planned 2.5%. Godrej Consumer came up with a profit warning, and Colgate Palmolive also did not come with some great results. So both of them dragged Nifty FMCG down. Nifty Energy was down by 5%, mainly by Adani Power and NTPC. NTPC, for some reason, which is a preferred stock, it's continuously coming down. So what happened yesterday and today, what are we looking at? Nifty closed flat, as I said, at 23,750. Broader markets recovered from their day's low. Small cap recovered about 700 points to close flat. Nifty mid cap ended up higher about 70 points. Nifty Auto went up for two consecutive sessions. I've been bullish on Tata Motors, and we hold Tata Motors because we believe when Tata investment comes, the IPO comes, Tata Motors and Tata Chemicals will be the biggest gainers. And yesterday, as I mentioned, we were wanting to buy and we bought both of these stocks. Pharma inched up higher. Pharma is the only bright spot now, apart from IT. Of course, Realty is there, but Realty is too small weightage in the index. FMCG declined. Realty, of course, as I said, recovered. Metal and IT ended flat, and US markets opened lower, but then ended up being flat. Now we have to consider our movements vis-a-vis what is happening in the US. US has been going up, whereas we have been only going down or flat. Nasdaq was flat, Treasury yields were flat, everything was flat in the US. FIs and DIs, FIs again took the opportunity, probably gap opening, and they sold into the gap, and they sold about 2,400 crores, whereas DIs bought about 3,300 crores. A very interesting thing here about IndusInd Bank. IndusInd Bank got into serious trouble last quarter because they had a microfinance book and a lot of bad debts there. So they have decided to cut some of their losses, about 1,570 crores. They're putting up on the block. They also had contingent liabilities last time, which shocked the market and brought down the market price significantly. So we have to watch the price in IndusInd Bank because everyone on the street is bearish, rightfully so, because the IndusInd Bank, shocked the market. And if you look at, this is a monthly chart. This is a monthly chart which talks about where IndusInd Bank today is. It's almost like at the 2020 levels. So this is one of the big banks which is down nearly 40%. This is a weekly chart. The weekly RSI, if you look at it, is the prices are still high, but weekly RSI has come back to where it was at the bottom of 2020 levels. So generally at these levels of weekly RSI, you generally can expect a bounce, but I would watch before getting into this. And so that is the stock of the day, I would say. And finally, this is the man who brought me into the stock market in 1991. as a finance minister in the first budget. I was so impressed. I left a cushy job at O&M, Ogilvy and Mehta, and jumped into the stock market, not knowing much except that I was an investor for about 7-8 years before that. So he has left us. He has left a path which I don't think any finance minister in the past has been able to achieve, and I don't think any finance minister will be able to achieve. Compare him with the current finance minister, and you'll know what I'm speaking. A great man, a humble man, and I think we should have 1 minute silence. And but he was the biggest India bull. He was the biggest India bull much before Harshad Mehta or Rakesh Jhunjhunwala or anybody. So I hope the markets go up because he's the guy who started investing as a cult. Of course, others took credit later, but he is the original bull, the original India bull. With this, I would like to say, whatever you do, hope you are successful. Thank you for joining me.